let's maybe kick off. So firstly to say I'm Alex Nicholls, Professor of Social Entrepreneurship at the Surrey Business School, and one of the co-directors of this exciting new program. Aunnie, do you want to say hi?
Sure. Hi, I'm Aunnie Patton, also one of the conveners of this program, and I teach impact investing and innovative financing at a number of universities, but Oxford is my home base, and so very excited about this. A lot of the content, which some of you know, is based off of a book that will be released in a few weeks that I've spent probably the past 10 years working on.
Yeah, so Annie's being too modest. It's not a little book. It's a very important book full of incredibly interesting stuff. And as she said, it really is the foundation of this brand new program. So let me just give you a quick overview of how we got here, and then we'll get into some questions about content. Just on practicalities, hopefully you can see there's a Q&A function for most of you. The easiest way to get us to answer questions, and we'll allow plenty of time at the end, is to use the Q&A function, please. Chat, you can do other things, introduce yourself, talk to your friends, but Q&A, if you can possibly use that, would be the best way of getting us to answer your questions later on. But if we can just go to the next slide, please, and keep clicking through. So the history of here, just pause there. History of this work at Oxford is quite an old history now. It's over 10 years since we began working on impact finance, and briefly what happened was we founded something called the Nicholls Centre for Social Entrepreneurship in 2004, focusing on this new thing called social enterprise and social entrepreneurship, and the models of organizations, the individuals involved. And pretty quickly in our discussions with these people in the field, it became plain that one of the main issues was access to capital. Surprise, surprise. So really a lot of our work shifted into thinking less about the models of impact organizations and more about how they get resources. And so for, as I say, more than a decade, we've been doing work on this. We did a book on social finance in 2015 that Arnie's in, and we've done papers and all kinds of evaluations and other pieces of work over the years. But in terms of programs, the Oxford Impact Investing Program is the oldest. That has its 10th birthday next year, and has been a success, I'm delighted to say. And on the back of that, we built out a social finance program, which is much more about blended capital, an impact measurement program, which of course is focused on how we quantify and conceive questions of impact and change with respect to the capital allocation of impact investing and social finance. And now we have this exciting new extension, as it were, course coming up, Impact Finance Innovations, which we'll talk about a bit more in a moment in terms of its relationship with these existing programs, but also as a standalone program in its own right. And just also, if you just can click through now 3 more times, you'll see we also have a history of other programs here, just to give you some context. These are 3 other programs we do for our MBA students and our MLF students, focusing on different aspects of impact, different aspects of capitalism, and on his own course on impact investing to the MBAs and MLFs. So I think there's a rich history of teaching and research in this space at Oxford. We take it very seriously. Many of our students either come from this kind of landscape or go into working in it as a result of our various programs, and we've always been delighted to help them, work with them. So that's really an overview of where we've been, and I think now maybe Aunnie may say something about where we're going.
Great, thanks, Alex. So really what Impact Finance Innovations is it's a chance to look at how we are doing impact investing and impact finance, and interrogate what the structures and the processes look like, and what are some of the ways that we can bring innovations from a structuring and a technology perspective, from a measurement perspective, to be able to really look forward for the next generation of impact finance. So this course is designed for individuals that are really looking towards what's next. For those of you that have experience in doing deals, with funds, as foundations, as individual capital allocators, to be able to see and experience what's being done on the ground, and even at different levels of experience, or different levels of deals and funds and structuring, to be able to equip yourself to do what is next. So this will very much work for individuals that are building on their current knowledge and experience, to be able to utilize new types of fund structures, new types of deal structures, and technology, and integrate measurement in a way that's very concrete and actionable. So some of the themes in the course, which you'll see if you've downloaded the course overview, include looking at different types of business profiles, innovations, and measurement. Alex, I don't know if you want to kind of talk a little bit about some of the things we're going to cover from a measurement and management perspective.
Yeah, sure. Maybe just take one step back. And I should have said this at the beginning. Sorry, everybody. I mean, you might ask yourself, why bother with this course? And I think Aunnie touched on this a bit, because firstly, it's very interesting and there's a lot of exciting work going on here. But really, I think where we both come from, we were chatting about this just before we began today, is thinking that there is increasing capital moving towards something called impact, and that's important and interesting. But we would both feel that needs to be accelerated dramatically, and also done probably more efficiently and effectively. So I'm speaking for myself, and I hope Aunnie to some degree here in her work. And I think the context here is to say that there's lots of innovation going on. It's important, but we need more of it. And above all, we need more capital coming into impact, an impact that is meaningful rather than being superficial. So just to the point that Aunnie mentioned with the work that I do on impact measurement and management, this will be part of the course. It'll be one of the sessions we do with you, and we'll be asking questions about, sometimes, controversial questions, questions that are in debate at the moment around the nature of impacts and how we can best measure it and account for it, but particularly around standards and monetization. So how do we put a capital value on impact? How do we put a dollar or a yen or a euro value on it? And also what's going on with pulling together standards of reporting and disclosure in this space. We'll cover many other things, but I think that's going to be in the spirit of innovation and advancement of the field with respect to the impact piece. That's significant in terms of this part of the course.
Yeah, absolutely. Thanks, Alex. I jumped right in. That is as my want to jump right into the details without the macro. And I couldn't agree more. I think when we talk about, Alex has been in the kind of impact finance field for much longer than most people have known about it. So, almost 17 years now. And I've been around for almost a decade. And I think that there was a lot of enthusiasm at the beginning about what could be done. And now that we're starting to see some of our hopes come to pass in the sense of the amount of money and the amount of attention, it is a really ripe time to turn and say, what's actually happening? What do deals actually look like? What impact are we actually having on the ground for the individuals that it matters? How are we actually, allocating capital? And that's very much what we're going to look at here. And some of the other just, smaller themes that we're going to integrate will be emerging technologies like artificial intelligence and the blockchain, to be able to understand how remote sensing can be used for measurement, for deal construction, as well as fund structures. Thinking about ways in which we can take blended financing to the next level, including ideals like impact carry, and then finally, and I would say absolutely not lastly, but really thinking about how do we make the impact investing process more inclusive around sourcing and due diligence and ownership. And I think this is something that both Alex and I see, and many others in the space, I'm sure many of you here see, is really thinking about who owns assets and who owns wealth, and what is impact investing doing around the transition of that. So we can obviously talk more about any of these themes, and we're really keen to dive into your questions. Please do submit them in the Q&A so we can have a discussion. But some of the different innovations here, which we've already talked about, really are this development of these alternative structures and how we're investing in SMEs, harnessing exponential technologies in impact investing, and ways in which we can do that more effectively, using blended finance in a greater way from a monetary perspective, but also from an impact perspective. And then, the sophistication of using grant capital, catalytic capital, which is something that, increasingly is part of the conversation, and, has been part of how we think about impact investing from the beginning, and ways in which there are significant opportunities to do so very effectively. And then, Alex, did you want to just speak a little bit about the integration with mainstream finance as well?
Well, I mean, let me say one thing. Yes, I will. But also, again, we were talking about this before the webinar. We're trying not to just make you drink the Kool-Aid. We will try to be honest with you where we can about things that aren't going right, things that didn't go right, things that are limited in their, what they can do. And so one of the kind of issues around this is the question I mentioned earlier about standardization and integration with the mainstream, whatever that might be defined in finance. And I suppose specifically here, it's around what's called ESG, or environmental, social, and governance screened finance. Now, this is a huge, huge market. You maybe even 40 or 50% of all assets under management globally claim to be ESG, which is increasingly being framed by some people as being about impact. Well, that would mean impact investing has gone up by an X of about 100, maybe more, in terms of assets compared with some analysis, if that were true. So when we look at this enormous pool of capital, it could be 50 or 60 trillion dollars in ESG against the impact investing world. It's very attractive to think of it as an opportunity to connect or to work with. And this is a challenge we have to think about. And the way I'll look at it with you is around what we think this stuff looks like in terms of reporting and disclosure. Because ESG reporting and disclosure, as many of you will know, is superficial at best and chaotic and often bespoke. And I think one question about standards as they become adopted by impact investing will be, do they also become bespoke and poorly thought through? Or which way, in a sense, does that conversation go between the mainstream and impact investing? Because if we're honest, we know that's where the money is, so it cannot be ignored. So it's a big debate, but we'll try and make it a debate and have different views and see if we can come to some consensus as we go forward.
Excellent. So we have, as always with Oxford courses, we have excellent Oxford faculty that will be on the course, as well as a set of guest speakers that are, this is a young space. So impact finance is young. This type of innovation that we're talking about with these types of deal structures and, using this type of measurement and the catalytic capital is very young. And so what we've done is to be able to pull together individuals that have really been at the forefront of this work and are able to speak about not just the successes, but also the learnings and the failures and the struggles to be able to be pioneers in doing the first types of deals that try and embed impact into contracts, in trying to, try out new forms of grant capital, use measurement tools alongside emerging technologies to be able to, really have insight into real-time data. So the speakers will be individuals. We have a few listed here that are going to be on the course. There's going to be a whole set of individuals on the course, as well as that you will be, as a course participant, able to interact with some of these practitioners as mentors as well throughout the course, which is something that we offer mentors, tutors that we do in the Oxford style. So before I get into this next piece, I'm actually just, if it's okay, going to go through a quick, there we go. I can do this. There we are.
Aunnie, sorry to interrupt. Do you just want to say something about the feel of the course? Because I know this maybe sort of stress at the beginning, the incredible underpinning of this, the cases. I know they're listed here, but maybe just give a flavour of what the course will feel like in terms of some of these content pieces. Is that possible?
Yeah, of course. Yeah. So, the course is going to be very, case study based, in a sense of not by any means not a, read a 40-page case and come back and, and discuss it. But we're going to be building off of quite a bit of it will be building off of the work that I've done in the book Adventure Finance. So what we're going to be doing is being able to interact with individual cases, but also with individuals that have had experience using some of these different types of structures or setting up these funds, et cetera, in a way that allows you to question and also to get bespoke feedback based off of how you're wanting to integrate this. So the course is going to be, it is going to be online, so it's going to be 6 weeks online. We're going to have pre-recorded material for a chunk of it of about an hour and a half or so of pre-recorded material each week. And then the sessions themselves are all going to be interactive. So the sessions are designed so that you come to the table and you spend the time engaging with us, engaging with speakers, doing cases, being able to do Q&A. You'll have study groups, learning groups that you will engage with to be able to dive into some of these different topics. So it's very much designed how we've done this, and Alex and I both now have run mini programs online over the past year and a bit, and I've been running online courses actually for quite a few years now, is to make sure that you're able to, in the time that you are dialed in, to really engage with each other and really engage with the practitioners. So there's going to be very little of us talking like this, like we're doing right now, of the talking at you. It's going to be small group discussions, large group discussions, case studies that you're doing within your study groups, and real hands-on experience to be able to make sure that you get to engage not just with individuals that absolutely positively have a fountain of knowledge of this, but also with each other, and talk about what you're experiencing, because this course is going to rely on individuals having significant experience, not significant, but at least experience in the impact finance space. We're expecting there to be a very high level of dialogue during the course of individuals trading their experience.
Just on that point, Shanita's asked in the Q&A about either of us having experience of actually using these tools and exiting and so on. Obviously, I'm an academic, so I don't really do anything real. But I think you want to say something about what you've actually done briefly, practically, Aunnie, to that point, Shanita's question?
Yeah, Shanita, I have experience with a lot of these actually. So my work, in addition to teaching, is consulting and advisory work with funders. And then I'm also an angel investor myself, and have used multiple of these structures, have actually created a couple of them that we'll talk about in the course, or have been in the room when the creations happened for others, and have been part of really the practitioner groups that are trying to push these forward. This is, as Alex will point out, this very specifically, particularly the deal and fund structuring piece is where I have sat for the past 10 years. And it was 10 years ago, quite a lonely place to sit, because we weren't really discussing how to do interesting and kind of just different deals. It was very much about just doing equity and debt and impact investing. And so I think one of the questions that I've asked for 10 years now is, but how are we doing deals? Not just what are we investing in, but how are we doing deals? And really believing that it matters how we choose deals, how we diligence deals, how we structure deals. And so this is very much, for me, the space that I play in, and the people that the guest speakers will bring on the course. And Alex, as he's doing even right now, is very good at just contextualizing and, having been in this space for as long as he's been around, and also just, being part of these conversations for, very, very, a very sustained, but also a very engaged period of time, gives you that nice balance between kind of the structures themselves, but also the historical context and kind of the future context of what the conversations are doing. Okay, I'll go through a little bit of the timetable. So we wanted to do a couple more minutes of talking and then open it up to questions. I see we've got a lot of questions. I'm just going to go through a super quick case if that's all right, of a structure. So Shanita, to your point of like, have any of these things ever worked? I'm going to show you a very quick example of something called redeemable equity. Hold on, just give me one moment. So this is a structure that we're going to talk about in the course. Redeemable equity essentially allows a funder to purchase equity or ownership in a company, but that ownership has a expiration date, in essence, that allows it to be repurchased by the underlying organization, which means that that organization doesn't have to try and do exponential growth and list on an exchange. And this type of structure is a very interesting one for social enterprises, as well as for organizations that are just purpose-driven, but also in emerging markets. So essentially how this works, this is an example of Fledge in My Turn, is that Fledge bought shares in My Turn very, very early, and My Turn had the option to buy back its shares from Fledge as a small stage investor at a later point in time. So there's kind of two different options that we generally see with this along the spectrum. So option A is the shares are redeemed in a lump sum. So in essence, Fledge says you need to buy these shares back at either this multiple or at a valuation that we determine based off of an outside party at a specific point in time, 7 years from now, 8 years from now. Another option is that My Turn actually buys these shares back over time in form of dividends, which can be a percentage of revenue, a percentage of cash flow, but essentially these dividends repurchase these shares at a set price over time, over 7 or 8 years, or some combination of the two of these. So there's a whole spectrum of ways in which the funder and the founder can determine what makes the most sense from how the founder is trying to actually build this company and how that would work with the transaction that they're trying to do. So in this example, in this case, Fledge put $20,000 into My Turn, including 2 months of training at their accelerator in exchange for 6% ownership or 50 shares in the company. My Turn was able to redeem 25 of those shares through quarterly payments, which were 3% of the revenue. So they paid out dividends and they bought back those shares at essentially 3 times what Fledge had put in. So it was essentially there's actually a zero missing there. Sorry about that. Oh no, that is right. So I guess it's $1,200. So it's 3 times the original share price. Then they had to buy the rest of them back after 7 years. So the other 25 shares, they had to buy back at 7 years, and they didn't have a stated price for those. So the redemption price in the contract was stated as a fair market value. So how that actually worked was that the owner of Fledge, so the investor, which is a high net worth investor, basically called up the CEO of My Turn named Gene and said, hey, Gene, we need to figure out how much you owe me for these shares. So he said, you did $500,000 in revenue last year. If I bought your whole company for $500,000, would you sell that? And Gene was like, absolutely not. And then what if I offered you $1 million for the company? Would you sell that? And then he was like, maybe I'd think about it. So final offer, $2 million for the company. Said, all right, I think I'd sell for that. So then how they determined the actual repayment of the rest of the shares was, so 1 times revenue, $500,000, isn't the right valuation. 2 times is interesting, and 4 times is too much. So what Fledge offered was 1.5 times. So what if you paid us 1.5 times the original shares, then you would buy us out essentially for $22,000, $22,500, which is what My Turn agreed on, and they wrote them a check. That's just a quick example of what a redeemable equity transaction can look like. For a lot of organizations, this solves a really interesting issue for them of being forced by equity owners to push towards an IPO or a sale of a whole company, or having to give up some of their social impact for financial growth when they actually want to be able to concentrate on continuing to address the population at the impact that they want and still needing risk capital. So just a quick example of what type of one type there's many types. So that's one chapter in the book of 32 chapters. We're not going to cover all of them in the course, but it's a very small piece of one of the things that we are looking at when we're talking about, how do we redesign some of these structures. Alex, do you think we should turn to some of the questions, or do you want to keep going through the outline?
Well, can we just quickly go through the timetable just very quickly, because you put it up? Let's just go through the 6 sessions so people have got a quick sense of the flow and topics, but we don't have to spend a long time on it.
Perfect. Yeah. So we've got the fundamentals and the introduction starting out, and we'll be really talking about, why are we doing this, the context, standardization, as Alex mentioned, all of the things that we discussed at the beginning. And then we'll be diving into risk capital. So one of the structures that I just talked about, the redeemable equity, is a type of risk capital that has been redesigned to really work for impact investing. And then week 3, Alex, this is actually Alex. Did you want to talk a little bit about innovative grant funding at all?
Well, I think you've said some of it. I mean, many people who work in mainstream investing, philanthropy is a distant and uninteresting topic, apart from the endowments you might manage to grow as an investment thesis. But actually, the grant-making universe is complex and sometimes eccentric, but it has a lot of money. I mean, endowments, $1.5 trillion, maybe above, and a significant amount of grant making. So I think what we're trying to do in this week is explore what kind of innovative philanthropy and grant making foundation work is looking like, not firstly in its own right, but also in how that works in concert with other investors to build structures around de-risking or whatever. So I think one of the joys of working in impact investing and social finance is you have this incredible spectrum of capital, because you have this combination of an impact agenda and a financial return. And very often the financial return is still, if not risk adjusted, then some kind of market return. But there's plenty of capital that's around that kind of ambition, including capital that will be given away. So when we think about grant making and the different models, I think there's a lot of innovation here too. And it's interesting in this bigger spectrum of finance we look at.
Absolutely. And then, Alex, you want to talk about week 4?
Well, we kind of covered this already, I think, a bit, saying that, the agendas around the future of IMM is impact measurement and management. Sorry for the jargon here. It's IMM is impact measurement and management. I mean, the agenda around this is 3 or 4 key things. One is about, as I mentioned earlier, standards of reporting and regulation. Can we get an agreement on how everybody does it in the way that they do, broadly speaking, with financial accounting? There's a set of issues around monetization. Can we, should we, how do we put a value on an impact? A change in a girl's education, somebody's improvement in health, the climate. These are contested and important and interesting issues. As Aunnie said, we'll look at technology. How do we take cutting edge technologies to enhance our understanding of impact measurement and management, and where do the bear traps lie in doing that? What will be some issues around that? At the moment, I'm writing a paper with a colleague around the problems of AI interfaces between different professional schools of understanding. So the computer science people and the accountants, how they speak totally different languages on either side of the IA system, and how that can be very problematic as well as interesting and enhancing. And the final piece is looking at regulation and the law. And I think we have a Q&A question about tax in different country contexts, and this is part of the question about how regulation fits around impact investing, impact measurement and management.
Absolutely. And then week 5 is really around fund structures. So we'll talk. I mean, we're talking about funds in general, but there's a lot of things around blended financing, obviously, that we can continue to improve on. But then just around fund structures themselves, does the traditional LP-GP relationship create problems for us in how we allocate capital and how we measure impact and how we actually have and optimize our impact? And so we're going to talk about things like outcome-linked funds, but also things like rolling syndicated funds, open-ended funds, something called a transformation fund, which is a PE buyout into an impact company. So these are the innovative fund structures and really rethinking how do we actually create funds that are able to provide the type of capital that is needed on the ground and also that is linked to impact. And week 6, I think, is a very important piece of what is the future of impact investing. And as I said at the beginning, this is very much around, how do you do deals and who owns assets? So thinking about transitioning to community ownership and employee ownership, and what does it actually look like to be able to reckon with some of the institutional inequalities that exist within the system that will require a lot of innovation and a lot of work to really be able to unravel, and that are going to be part of the reckoning of impact investing as it goes forward. And so highlighting some work that has been done, some practitioners that are grappling with this, that are creating strategies around making due diligence more inclusive and sourcing, around actually thinking about how they use their capital as a bridge towards more distributed ownership, to make sure that they are increasing the actual number of people that own assets, as opposed to just the amount of wealth held in a concentrated few people's hands. Which is something that we have to reckon with an impact investing, particularly when we're thinking about developed economies investing into emerging markets. Okay, I don't think we need to go through any of our backgrounds, and I'll let Annabelle talk about that at the end. Alex, it looks like we've got some interesting questions in the Q&A.
Yeah, shall I dive into a couple? I can say something too. We have not a lot of anonymous attendees, so I'm afraid I don't feel I can be very personal in my responses, so I don't know who you are, but you'll know who you are. There was a question about the international kind of perspective here, and to me that's very important, and we will be giving you examples from around the world and information from around the world as far as we can get it. The particular question was, I think, around Asia and the Philippines and other territories around there who are emerging into this space. And absolutely, we'll think about those. And just before Christmas, in fact, it's going to be published shortly, I did a report for the Asian Development Bank looking at the Philippines and other countries in terms of this new space. Very, very new in Asia, in my experience. A lot of it's now described as sustainable finance rather than impact finance, but nevertheless, there's a good piece of overlap. So I think we will touch on research we've done and work we've done outside of just the US and the UK and Europe in plenty of cases and examples. Just the other thing was quickly about, maybe you should say something, Aunnie, about the profile of people attending. I mean, one thing I can just quickly refer to another anonymous attendee, I'm afraid. Can this program be taken with an MBA? And the answer is no. The Oxford MBA is a thing unto itself. It does, however, include the programs I put at the beginning of my slide, including Arnie's impact investing elective and other programs too. So there is a component of the Oxford MBA, which is in this area. This program isn't part of it. However, you do mention, I think, can it connect with others? Yes, it can. As I said at the beginning, we have this portfolio of 3 existing programs, and this one could be a follow-on to one of those. We'll do our best to make sure there's very little overlapping content. There may be 1 or 2 things that we have to say fundamentally, but basically it'll be a different program, but an enhancement program. So either for people who already are advanced and want to go further, or people who are progressing through one of the other programs, or maybe more than one, and want to go, as it were, to the next stage. So I think that's hopefully answers some of the sort of structural questions.
Yeah, I would say absolutely, Alex. So I'd say, to the 2 questions around, if you are in banking and wanting to transition into impact, or keen to pivot towards it, but actually really suggest you look at our impact investing program, if this is something that's interesting to you, but very new. So for this program, and so we have, as Alex mentioned, an impact investing program, and you can get in touch with Annabelle, who will introduce herself at the end, about that program. And that program actually is running twice. So that would be something potentially you'd want to look at. As Alex said, this program is going to be an excellent follow-on from our alumni that have come through the social finance and the impact investing program, as well as individuals that are just experienced in their own right, have been doing deals, or have been working at a foundation, or have been working at a development finance institution, and being able to take what they're learning in their own work and be able to essentially dive into the next generation of deal structures and fund structures and measurement and management. So I think it's very complementary to anyone that's been on or is currently on the impact investing program. And those of you that are brand new to the space, I would really encourage you to check out the impact investing program before coming into this to this cohort. That would be my suggestion, at least. So I've got a question from Toku. How are you? Good to see you here. So yeah, absolutely, we're going to be talking about times that this didn't work. I think this being a brand new space, there's a lot more, I would say, uncertainty in that we have cases of deals. The deal I just showed you was the reason I picked it, and the reason it's in the book is that it is one of the few redeemable equity structures that have been done, that have been finished. There's only a few of them really globally that have been invested. People have paid back the shares, and the company has gone on, because if it is kind of about a 7 or 8 year process, which not all of them are, there's very few of these deals that were done 8 years ago. Because they were so new. So in some cases, we'll be able to say, listen, this didn't work. And absolutely, we have examples of that. And we will ask speakers to talk about that. But then in other cases, we'll be able to say this was tried and we don't know if it's worked or not yet, frankly. So here's a trend of ways in which, data is being collected and used in contracts, but these contracts are only 2 years old. So we can't tell you yet if, the impact that they're trying to achieve has been achieved, because they're looking at a 10-year horizon or a 7-year horizon. So I think there is a certain level of uncertainty to this. And thank you very much for the comments in the chat around how this is at the forefront. Absolutely, this is the only course of its kind in the world. This work that I've been doing for the book for a long time is very much work that is untested, because we're just now at the point where we can really start to look back and start to evaluate some of these structures, and we're still just barely there. So I think that there will be a certain level of discussion when we're talking about any of these cases to say, right, well, we know the structuring has occurred, but we actually haven't seen the result of this. So what do we think this means, and how will this continue to develop? So this is a space where we're all creating it, right? This is a story that we're all continuing to write. And so the course is very much designed to be able to bring together some of the learnings that we already have, but with the understanding that we don't know sometimes what we even don't know. Alex, you can add to that.
I mean, just to say, I mean, obviously this program's a way out from now, and a lot can change.
Yeah, that's true too.
And I think what we'll try and do is, obviously there's a core element to this program, but I think we'll try and be adaptive as things happen as far as we can in real time. The joy of having so many great speakers in the room is they'll tell us stuff we don't even know yet. What's actually happening in their organization right now. Is there a deal they're finishing right now? Did something go wrong? What's the political or climate or social context that might be changing right now? We're in a really febrile transitional phase at the moment. While some nations, as you know, are moving, we hope, towards the end of the pandemic, many are not. India, of course, most obviously having the most appalling time right now. So we're still in a very, I think, uncertain period. And, we'll try and, I think, reflect what's happening as it happens as far as we can, and keep it current as we move forward into the program.
Yeah, absolutely. David, to your question around the course focusing on structuring techniques as well as kind of deciding on what types of structures should be brought to investors or to the market. Yes, absolutely. So there's going to be a good balance of, the discussions around why we're doing this, what we should think about when we're creating new types of structures, as well as if you want to do specific types of structures, here's what people have learned about them. So, a big key component of this needs to be the discussion around what is next, but also, some of the very practical tools of what some of these individuals and organizations and sections of the market have learned. because we are starting, even though lots of stuff is new, some of these structures, for instance, things like revenue-based financing, and even things like recoverable grants, have been done to an extent where there is a significant amount of learnings, and even things we can talk about on the contracting and the tax side that are sometimes really holding back the industry. So there's a couple of questions around tax. Obviously, this is very jurisdiction specific, but as part of the work that I have done and will continue to be doing is around gathering lawyers and accountants into the room to talk about what are some basic principles that we need to think about when we're doing these types of contracts. So for the book, I ended up interviewing about 40 different lawyers and have created a whole kind of set of at least ideas around this that are being tested, that are continuing to be tested, and potentially will result in some projects and some engagement with governments around this. So there will absolutely be kind of very specific elements to this that we can dive into, and those are another examples of some of the office hours and tutoring that we're going to be offering that allows you to engage at that level with some of the practitioners as well as ourselves.
And just to add, I mean, this is can be both a problem and a benefit of the online environment. I mean, we're going to try and make sure you learn from each other. I mean, it's a very humbling thing. Having done these programs for more than a decade, most people say the thing they love most are the other participants. And we just, to some degree, our job is just to curate that. So it is much harder, I know, when you're not having a drink together in Oxford or whatever. But we'll do our best to make sure, around time zones or regional areas or whatever it is, that we can make sure, and your study groups, of course, and the case study breakouts, you get to know each other, you make contacts, you can share knowledge, because in any of these cohorts, there's an amazing amount of skill and knowledge in the room that isn't us. And we're conscious of that. And as I say, it's not so easy in some ways to do it virtually, but we'll be very attentive to that, I think.
Yeah, and I think just on that, Alex, that we're looking at a very wide spectrum of innovations here, and so we're going to be very conscious when we're curating the individuals in this course that we have a spectrum of experience. And so there may be people in the course that have a lot of experience as a foundation and using innovative grant structures that do not have experience with mainstream traditional kind of equity and debt structures, but will bring a huge richness when we're discussing, what are ways in which we can really catalyze a grant capital alongside other types of capital, or integrating impact into contracts, et cetera. And the same thing with people that have been, I already know from engaging with some potential attendees, for instance, that have a lot of experience with mezzanine structures and have really worked hard to be able to develop mezzanine structures in emerging markets for enterprises that are impact enterprises. They're very interested in learning about a bunch of other ways in which they can work with those structures. And so, but there will be people on the course that have never used Mez. So there's going to be a nice mix of experience on the course, with the kind of underlying theme of individuals that understand this intersection of impact and finance, and that really want to be able to proceed into the next phase of impact finance and deal making and fund structures and measurement. Alex, Ashok has asked if we're going to talk about results-based financing.
We can talk about that forever if you want to. I mean, impact bonds, social impact bonds, pay for success, payment by results contracts, really, really sexy stuff. I've done a bunch of work on that, and so has Aunnie. So yes, we will talk about that. Not as a dominant feature of this space, because it isn't, but it's a very important and interesting innovation. And, we'll of course be open to go where the conversation is led by you guys. If it's something you want more on, one or both of us can do, a separate tutorial workshop-y session outside of the main course, which we do a lot of the times to answer demand. So we can do how do you put these things together? What's going on in the landscape? So sure, I mean, it's one of the the most popular innovations in this space, and in its essence, it's actually absolutely crucial. Which is to say, if we can actually develop models that put a price on impact that is agreed by all participants, So it's something that both the service providers, outcomes payers, and investors agree on. That seems like a kind of alchemy, but of course, there's much beyond just that simple assumption. But yeah, we've done work on that stuff, and we can talk about it.
Well, and also, right, Alex, I mean, some people that might understand results-based financing may not understand what impact-linked financing is. So actually taking loans and equity investments, and similar to a more grant-like investment in a SIB, or as a results-based financing, actually linking those results to impact. So I think there's an essence of this, of like, if you come into this course, knowing what a SIB is, I think you will be very pleasantly surprised and understanding that there are actually 10 different ways to integrate that type of thinking of wanting the capital allocation or the pricing of the capital to reflect the impact that's being created. But there's a lot of other ways to do it that may not involve a multi-stakeholder transaction, or that may be simpler, or that may be more market-based. And so that's the basis of this program, is pushing beyond what you already see out that's easily available, and really getting towards how people are adapting even some of these innovations like results-based financing, which is an innovation in itself, but how people are taking that and making that more accessible, cheaper, easier to be able to integrate within different types of funders. So it's a great example of that. And thank you, Aunnie, for ordering the book. Actually, if Annabelle, if you wouldn't mind, you can drop in the book link in there if you don't mind. Otherwise, I'll do it in a minute when you're talking. Toku, from your question around the time zones, so we'll do similar to what we've done with the impact investing course, where we try and pick what is known now in conference organization as the golden hours, which are the hours that work for San Francisco as well as Hong Kong. So that we will be doing it in the middle of the afternoon from a kind of UK, and I'm in South Africa timing, but it will be evening, early evening in the, mid-evening in Asia, and early morning in the West Coast. So I do courses at that time, Alex does that courses at that time, and it seems to work. We do know you have to stay up a little bit late, but don't worry, it won't be like 1 a.m. in the morning for you. Always an issue. Time zone's always an issue.
And to that point, we try to make the sessions as interactive as possible, because however sleepy you are, or how recently you got up, you still don't just want 3 or 4 hours of us talking at you.
No.
So in this environment, as many of you I'm sure have found, it's even more important than in a classroom to get you guys doing stuff and thinking and engaging, because you may well be tired, or it's a funny time of day. So we are attentive to that suffering.
Absolutely. And Janice, to your point, yes, this is the first time the course has been run. It will be run virtually this year. We anticipate running it every year. Obviously, it depends on the popularity of it. From what we've seen already from some of the demand, we're very excited to be able to add this to the program. So just so we run each of our courses once a year, and then we've actually added we're actually running impact investing twice this year, looking at potentially running some of the other ones twice, just from the level of demand. So we'll be running this at least once a year, and may in the future have a virtual as well as an in-person, or switch to an in-person. So we'll see, but yes, this will be run now in November, and then will be run in 2022 as well. All right. I was just looking through our questions here. Oh, Nasreen, you were asking about the equity buyback. So it can be a put option, or it can be mandatory. There's a whole complexity around tax, as well as structuring decisions that you can make. So that's one of the decisions that you can make around, there's different types of payments that you can mandate. So I've grouped them, when I'm thinking about them, into 3 different types of payments, which are scheduled, which are mandatory payments, but mandatory from a dividend perspective. So they can't obviously bankrupt a company because they're dividends. They have to come from free cash flow. And then elective payments, and then the settlement payments, which are at the end, which we talked about, which in essence can be compelled by an investor, just as any payment can be compelled by an investor, with the understanding that if you take a company into default, then there's obviously ramifications there. But that's the kind of thing we'll absolutely talk about, and we'll have lawyers and accountants in the room as well to discuss the impact that has on it, but also just thinking about what are the types of ways in which you think through what's best for both yourself as a funder and the entrepreneur too. And that's the real core of this is, how do we design structures, funds, and deals that are really trying to meet the needs of entrepreneurs as well as the impact that we're trying to create. So I think those are both really important. And then I think, Alex, you did mention it, but for Hilda, this is absolutely a standalone program, but it was a really nice complement to the other programs. So yeah, thanks, Alex, for sharing the link to the book as well. Annabelle, or Alex, sorry, should we do some closing words, then we hand over to Annabelle to talk about scholarships?
Sure. Yeah, I mean, I think we've said a lot, I hope, about the context and content of the course. I know it's been very quick and sort of high level. I mean, just to say we're excited about this. I mean, I think for me, it's strange to think a bit. Aunnie was a student in my class way back when, which is not to say I taught her anything, but she was there. And she's become, maybe the leading person globally in thinking through this kind of work, and her book will be unparalleled, and it'll be the course foundation. So, I mean, I don't want to oversell it, but I think it is a unique course, and we'll have a kind of content you won't get anywhere else. So, it would be great to work with you through it in November.
Thanks, Alex. I did learn a lot for you. It is fun to think about 10-ish years ago coming to the MBA, because at that time, Alex was the only teaching faculty on impact finance in the world. That's why I chose the Oxford MBA, which ended up being a great thing. So yeah, I mean, as Alex said, this is just the content on this course is just very unique. And it's the type of it's content, but it's also, as we've said again and again, it's discussion. It's going to be the people on the course. It's going to be the speakers that we're bringing are all at the forefront of what will be, hopefully best practices in impact investing, about being very purposeful, about the types of fund structures we create, about the types of deal structures, about the type of data we collect, how we collect it, how we think about how we integrate technology into what we're doing. So this is, if you are passionate about impact investing and interested in how we take this to the next level, this will be the world leading course in this area. So we are very excited about it. Annabelle, I will share my screen so you can talk about scholarships, and we'll hand over to you.
Well, super. Thanks, Aunnie, and thanks, Alex, for your time today. I hope everyone found this really helpful and interesting to learn about the new programme. I think the main thing I would advise is we're really keen to have conversations with you to make sure this is the right programme. It's gonna suit your needs. As Alex and Aunnie mentioned at the start, we have 4 programmes in this portfolio. So what's really important to us is that we put you in the right direction. So please reach out. Very happy to kind of have calls over the next couple of weeks to look at options and what's going to suit your needs best. As you can see on the screen, we do have some scholarships available for this programme, which we offer on all the impact programmes. So there will be an email coming out next week with more information, but effectively the scholarships offer a 50% discount on the course fees. In order to apply, you would need to be working for an NGO, and the deadline for applications would be the end of May. But please keep an eye on your emails, because we will be sending more information out. If you don't believe that you're on our mailing list, again, please drop me an email, and I can get you added on. Absolutely fine. Probably one more thing to add is in the chat box. I'm going to add in all of the programmes on a link so that you can have a look at all of them together. To then kind of filter which direction you'd like to go in. And again, please reach out if you'd like a conversation to discuss this programme to make sure it's going to suit you. But I think that's everything from me. Aunnie, I don't know if we have one more slide with just my details on, with my email address, if you'd like to kind of reach out and get in touch.
Didn't mean Sorry, I went on mute. I didn't mean to. I meant to keep sharing that. Hold on, I'll put that back up. Here we go. Great, yeah. And I would just recommend, I mean, this is, as we said, this is part of a suite of programs that we have, which is pretty much the largest suite of programs around impact finance in the world. So Annabelle and team are very well positioned to be able to talk you through what the different courses look like, and what makes sense in what order, or which one to choose from. So I definitely encourage you to reach out and figure out which one is best suited for you, and we will look forward to getting to hear from you on that. Any other last minute questions that anyone wants to throw apart? We are ahead of time we've got an extra couple of minutes on the session. Anything else, Alex, you want to add?
Well, nothing beyond saying thank you, everybody. Stay safe and well, and we hope to see you later in the year.
Yeah, actually, yeah. Do stay safe and well. And Paula, as far as a hybrid version, these are basically hybrid courses in essence. I mean, there's lots of, they're all online at this point, but we will be using technology to do live classes that are virtual right now, and we'll see what 2022 brings. So we're right now, the courses that we're offering are online for the rest of the year from an executive education perspective, but we'll see what happens. So who knows what 2022 is going to bring, more opportunities to be engaged with Oxford virtually and in person. So thank you very much. Really great to see some familiar faces and names. So thank you for your time, and thanks, Annabelle, for your help setting this up, and Grace. And yeah, I guess that's us, eh?
Thanks very much.
Bye, everyone.